Here we go. So, hi everyone. Thanks for joining us today. The point of today's roundtable is really just to have a forum and a really open conversation on key trends in the Lendtech industry at the moment, specifically based around how COVID-19 has accelerated things within the Lendtech space and is going to continue to accelerate things thanks to a sort of a big digital transition from customers. I'm Sharif. I am the Lendtech consultant at Currency Cloud. I have a sort of background in Lendtech myself, coming from IWOCA for 5 years, and I really work closely with lenders to sort of manage infrastructure, plan how they're going to run their sort of payment engines for them, FX and so on. I'm going to introduce everyone individually and really just let them give you their own introduction as well. So I'm joined by Ben Sher from Funding Exchange, Sean O'Keefe from Marqeta, and Harry Canfield from IWOCA. If you guys would like to introduce yourselves and talk a little bit about what you do and your businesses, if we start with Ben.
Yeah, absolutely. Thanks, Sharif, and pleasure to meet with the guys here and speak to everyone, and thanks to Currency Cloud for the invitation. So my name is Ben Sher. I'm the Chief Commercial Officer of Funding Exchange. My personal background is around about 20 years in the financial technology industry, in a variety of sectors, including capital markets, lending, asset finance, and a few others. My role at Funding Exchange is multifold. So one is being responsible for the commercial growth and strategy of the company, but also oversight of our plans and strategy into the diversification of the company into that of a technology provider. And I'll explain what I mean by that. So for those who are familiar or not familiar with Funding Exchange, the company was founded in 2014 off the back of the bank referral program, originally as an intermediary, facilitating introductions from high street banks to other providers of finance to SMEs who weren't successful in their application to the bank. We seek to go about those intermediations by leveraging technology. And over the course of that journey and the growth of the business, we've invested very heavily in our technology platform and built out a core platform that allows the core capability of assessment of eligibility and affordability of a particular SME applicant to the suitability of their request and status of their business, and mapping that to the appetites, credit policy, product specifications, etc., of different lenders, funders, and providers of finance and their respective products. Over time, our business has developed from purely being an intermediary-focused organization into also a provider of technology services. And so the audience will see over the coming weeks, we're actually launching a new element of our business, which will be called FXC Technologies, which is leveraging our core technology capabilities into the provision of solutions for banks, lenders, funders, and then actually brokers around that eligibility and affordability context.
Great. Thanks a lot for that, Ben. Sean, if we could hear from you.
Yeah. Well, first and foremost, just thanks for extending the invitation to participate today. So my name is Sean O'Keefe. I'm currently the Senior Marketing Manager at Marqeta. Primarily, in terms of my remit at Marqeta, I focus on developing communities, especially from my perspective. The whole fintech and the success of fintech is around the collaboration of the ecosystem, and the trend we've seen is the movement from competition to cooperation. So in the lending space, that started with a concept that we coined at Marqeta called Lending 3.0, which I'm looking forward to sharing more details with everyone on the session today. But yeah, in terms of Marqeta, so Marqeta provides the essential tools and infrastructure for companies to build modern card programs. Our platform is an open API platform, which essentially gives companies complete control over product development in terms of any rules they want to build around how cards are processed and issued. We work with lenders across the spectrum, so SME, B2C, and more recently Buy Now, Pay Later, to the likes of Klarna, Capital on Tap, and Time It in the UK. And ultimately, what we're trying to help these lenders do is bridge the gap between lending and payments. again, which I look forward to sort of sharing more details on shortly.
Fantastic. And Harry, finally.
Hi everyone, and yeah, thanks for having me today, Struth and Currency Cloud. It's great to be here talking to everyone. So I'm the partner channel manager at iWalker, and for those of you that might not know iWalker, we're a lender in the SME space, focusing on small and micro businesses across the UK and Germany. We've lent or made available over 2 billion to over 50,000 SMEs, and prior to the pandemic held a 12% market share of the UK overdraft market. So have sort of made a bit of a dent over the past decade. And we've really put sort of data and technology at the core of our business. And what we've sort of seen over the past years is that embedded finance is a channel that's helped to grow our business greatly, and that's the part of the business that I look after. So I'm responsible for our relationships with our over 20 embedded finance partners, and this includes market comparison sites like Funding Exchange, our neo banking relationships, and many more, including accountancy software providers.
Fantastic. Great. So we'll get onto the main part of the discussion now. Really, this discussion is based around, over 2020 and sort of during the pandemic, we have seen a lot of businesses and consumers alike really make a move to digital. And this has led to a lot of innovation, obviously in a lot of areas, but really, especially within lending and sort of arenas where people were perhaps traditionally relying on their banks and incumbents much more than sort of tech-driven lenders or even neobanks and so on. We've now seen them actually, due to things like, for example, in the business space and CBILS, with huge backlogs from incumbent banks that weren't able to process quickly enough and so on, we've actually seen people for the first time really actually scope out these sort of newer markets, the alternative lending space, the neo and digital banking space, and actually begin to make an avid move towards these spaces and put a bit more trust in them. And thanks to that, it's really come to light that these spaces are technology miles ahead, sort of technology-wise miles ahead. And that's been great. And sort of these spaces have now captured a lot of customers that previously were umming and ahhing about moving or not really looking into the space very much. And we want to discuss, how that's led to an evolution specifically within the Lendtech space and embedded finance space, and how we think that evolution really now is going to progress, partly because a lot of large players are going to have realized and have already started to make moves on, actually, we do need this technology, or we need to partner with people with this technology. And partly because the lenders themselves now, thanks to sort of capturing this additional market share, how do they keep it and how do they make sure they are continuing to be ahead of trend? So the first point I'd like us really to look at is sort of going backwards slightly, and probably better off starting with Harry on this one, but everyone feel free to jump in. What, as a lender, Harry, what was really the biggest challenge that you saw during sort of the pandemic, or from the start of the pandemic onwards?
Yeah, so obviously everyone went through a lot of changes around that time, but what we really saw was overnight customers sort of changed from calling us to access finance to sort of panicking about paying off their outstanding balances. They didn't know what was going to happen to their business. They didn't know if they were going to be able to continue to trade, when they were going to be able to reopen, if they were having to close. And it was a sort of really stressful time for small businesses. And this wasn't just the case for us. You heard all the stories about all the banks being inundated with calls, as well as all other lenders. So the first port of call was for us was to really make sure we were able to support customers as much as possible. So we had people sort of being moved from teams all across the business into customer-facing roles that had never done that before, because we were just sort of inundated with calls, and we put put procedures in place to try and ease this pain and help these customers. And then what sort of came after that was the government support being announced. You obviously alluded to some of it there with the CBIL scheme and the bounce back loan scheme, along with other grants and the furlough scheme and numerous other things that customers could access. So we spent a lot of time around this period really focusing on education and helping customers keep up to date with what was available to their business. We obviously later became accredited for this CBIL scheme and were able to sort of contribute ourselves, but there was that sort of couple of month period where our key focus went from issuing loans to really helping customers remove the anxiety around paying back their current balances and educating them on what support was out there.
Yeah, and Ben, it'd probably be quite useful for you on sort of the flip side of that, being able to see, you know, all the trends and data from the customer perspective, and how that was moving around, you know, from the start of the pandemic and onwards. So, you know, what were you seeing at that point?
There's been a few really interesting progressions over the last 12 months, some of which I would say are continuations or accelerations of progressions that we were starting to see before the pandemic, and I'll explain what I mean there. But a few interesting points that our data is starting to show. So just to put this in context, I mean, we intermediate around about 10,000 requests for funding a month across a range of financial products, from unsecured lending through secured. We do some property, we do asset finance, we do ABL, all within the SME sphere. So generally in the sort of the 10K to $1 million ticket value. And what that means is that we exactly as you say, Sharif, we've got quite a lot of data that we can look at across a variety of different types of lenders, around about 80 lenders on our marketplace. And two really interesting trends have started to come out. Well, not started to have come out from the data over the last 12 months. One is that, surprisingly, the split of businesses that have done well versus those that have struggled is around about 50-50, which is quite a surprising split. I think all of us, when the pandemic began, would have assumed that would be, you know, more like a 70-30 the wrong way kind of split. But actually quite a lot of businesses have prospered, and many of them reporting trading volumes in significant increase as a result of the pandemic. And so that has changed the way in which they are going about seeking finance as well. Another thing which is becoming clear is that there's always been a fairly strong correlation between the strength of personal credit profile of key directors and the health of a business. And that correlation has become significantly tighter as a result of the pandemic. One can imagine there are numerous reasons for that. Obvious example being, in a small company, the owner of the company, if they're the type of person who runs their own personal affairs with diligence, they would do that of their own business. Conversely, probably easier to have a good personal credit profile if you're an employer, or if you're on the payroll of a business that is doing well. But there's been some very interesting progressions coming out of it. I mentioned that there's also some trends that we see as really extensions of things that were already happening prior to the pandemic. And what I refer to there is in the way in which technology is viewed by banks and lenders. And so for quite some time now, in lending, we've seen and really acknowledged the fact that the industry as a whole is somewhat behind other verticals of financial services in the adoption and use of technology in a variety of ways. And what we've seen is that over the last few years, banks and lenders have increasingly engaged on the take-up of digital transformation, specifically in the context of direct customer engagement. And essentially, how do you make the customer's journey easy? And that's a whole kind of whatever that we'll just park over to the side for a second. But what became really clear really quickly is that the need to do that accelerated massively as the pandemic kind of broke. And you had this interesting dynamic of some banks and lenders who had already invested quite well and, you know, had various things up and running with customer engagement, levels of auto decisioning, sales and CRM workflow in their RM teams, and those who had really relied on a face-to-face relationship-led approach to underwriting deals and closing business. We're in this kind of scramble situation of we have to get something up. I mean, some of them didn't even have, you know, e-documents set up, and so there was this really interesting dynamic of some firms continuing on the trajectory that they'd already started on, and some having to desperately figure out what their digital strategy was in a matter of weeks.
Yeah, really interesting, and that leads on quite nicely actually for Sean and maybe Harry to jump in partly from a lender perspective. But Sean, what, you know, due to those trends, I mean, what you as a technology provider, did that lead on to sort of differences in trends that you were seeing from people coming to you asking for sort of varying technology stacks or actually trying to update their technology a lot quicker than they previously had been? And again, leading on, once Sean's finished, how it'd be good to get from your perspective, obviously, you know, how IWOC dealt with that and how they had to update systems and things to make sure they were able to really stay relevant, but also manage this quite large digital transition from customers.
Yeah, certainly, Sharif. So look, from my perspective, if you look at sort of lending, the innovations all happened at sort of the front end. So with onboarding, trying to digitize the onboarding, whether that's identifying people, verifying who they are. Obviously, it's the speed of application and the speed of decision, which obviously the likes of IWOC have brought to the table, and Funding Exchange with their intelligent data that they brought into that process. But actually, it's the last mile, it's the last leg where innovation has really lagged. And that's what I was sort of referring to when I talk about bridging the gap between lending and payment. Because if you think about it, the borrower experience is actually a bit broken. If you look in the consumer world, you see these credit cards and the cycle of debt that people fall into. And that's because, you know, you lend them money, but you're not actually helping them better manage and understand their finances. And obviously that relates to in terms of their payments, spending behaviors and habits. The same could be true in the B2B world as well, of SMEs. Obviously you provide a working capital facility. But in the old world of doing a bank-to-bank transfer, as a lender, you know, you have minimal visibility in terms of how that SME is spending. And actually, the pain point doesn't really get realized or sort of recognized until either there's a default or someone comes back for an additional top-up. At that point, then obviously you can look at their transaction data. So really what we've seen is a trend whereby lenders are now more encouraged and more inclined to start to say, well, actually, I do want to bridge the gap between lending and payments. And we're seeing that with the card being the instrument. And I think as you referenced, you know, when I think about Marqeta, what we try to do is really revolutionize the way in which you build and issue cards. Because again, if you think about the old world, it could take years to build a card program with all the legacy technology and all the legacy players in that ecosystem. So really what we did is opened up our platform, made it an open API platform to allow lenders to take control over how they build their card programs. So some of the things I'm seeing in terms of how you fix the borrower experience is Capital and Tap, for example, with their credit card. If I'm an SME and I've got 20 employees, I can issue cards to each and every individual employee. And I can set specific spending rules and limits around how those cards are used. So that could be for marketing, could be finance, it could be for whatever function it is in the business. That borrower is also then receiving real-time insights in terms of the spend, so they can better budget and categorize, you know, the month or the quarter or whatever they need to do to help smooth out those cash flows and actually get better with their spending habits. And then the final thing I'm seeing is the movement from off-the-shelf APRs to actually personalized solutions at the point of purchase. Once you have a card instrument in place, if I'm an SME and I'm going to a merchant and I'm going to be spending money for stock and equipment, well, as a lender, I know that there's less of a default risk with that particular transaction. So using a platform like Marqeta, I can say, okay, for that transaction, I'm going to let you have that for 2% APR. If you're going to spend the money with, I don't know, paying a VAT bill or whatever else it might be, I'm going to charge you a higher percent rate because I know that inherently it's a riskier-based decision. So it's using real-time data at that point of purchase to deliver a personalized experience where the borrower can actually benefit. And I think what it's trying to achieve is a transparent relationship between the lender and the borrower.
Yeah, that's really interesting. And yeah, as I say, finally, Harry, it'd be good to hear from you, obviously, as a direct lender, you know, how you had to sort of change basically some processes and things, for example, behind the scenes throughout the pandemic to really, you know, IWOC has always been known for being very good at building a lot of things in-house and being quite, you know, tech savvy and at the forefront really of that tech drive. So it'd be good to hear how you had to adapt in order to really actually, as I say, deal with this sort of big digital movement where perhaps a lot of customers in their droves really were moving on to coming to IWOC instead of going to their bank, for example, and how you had to deal with that.
Yeah, I think there's sort of 2 points to touch on there. So we've always sort of adopted a very digital journey, and we've sort of pre-pandemic we had instant decisioning, which we've sort of made the most of through funding exchange. But something that we've seen sort of even more so now that Ben sort of started to touch on as well is that the customers want certainty early on in the journey, and they want to know what they're going to be approved for and what's available to them with as little effort as possible. Now, from a lender's perspective, that's sometimes difficult to do. You need to do a credit assessment. You need data and information on that customer. So that's an area that we've sort of really focused on. And like I say, we were able to do that once we'd received an application. Prior to that, but sort of we're working now to actually be able to provide those sort of quotes and that upfront information to the customer even earlier in the journey, so that whatever it is that they're using to run the business, the different apps and services that they use, we're looking to make that finance available to them, or at least that educate them on the options that are out there to them at this point, so that they really can have these options with as little effort as possible. But then on the sort of adapting through the pandemic side, IWOC, as did many other lenders, we had to build a C-bills product within a matter of weeks. And you know from your time in lending, Sharif, IWOC, that building a product is no easy feat. Normally it would take months, if not years. So that was a big sort of strain on the team, and something that we sort of had to work really hard on. And there was plenty of bumps in the road, but we obviously sort of got there in the end, and have ended up issuing over 300 million on the scheme. And so that's helped us moving forward to be able to develop new products much more easily and quickly, and this is something that we're sort of going to take forward in the coming months and years to sort of really broaden our range of products for SMEs.
Yeah, and I think that's really interesting, because I mean, just from my perspective, from a currency cloud point of view, that's probably one of the trends that I'm seeing from people I speak to at the moment, is actually more of that, putting the infrastructure in place to be able to launch quickly, to be able to separate products very quickly, you know, enable mass reconciliation and so on. So you can actually deal with this influx of customers. You know, it's great that you can take market share, but you're quickly going to lose it if you can't actually manage that customer base. And I'm sure, Sean, you'll probably echo that in the fact that sort of what customers want now from a technology partner perspective increased in terms of, you know, maybe before they're using modular APIs to plug into one or two things. Now they're actually more focused on that, really having that strong infrastructure and all of those processes in place quite early on that allow them to do that. Another sort of interesting point that I'd like us to cover is really probably start with Ben on this one, is, you know, where do we see the next big trend in Lendtech? You know, we've talked about people going more digital and becoming more tech savvy, but I mean, from your perspective, do we see it being more sort of, the embedded lending in the embedded finance piece, actually having those in-house APIs and the capabilities to do it, or, what do you see the next big trend being?
Yes, there's a couple of things that we see, and actually this touches quite significantly on what Harry was just talking about earlier in terms of the ease of engagement from a customer perspective, and into that, how do you present the customer with the right product for them? And so one of these aspects is that in the early days of digital engagement in lending, most technology platforms and most organizations presented, well, those that had a digital version of their engagement, presented a journey to a customer that really expected the customer to have a fair degree of expertise in funding structures, where the customer would basically begin a list of stuff and say, do you want an MCA? Do you want an unsecured loan, a secured loan? Do you want a hire purchase? It kind of, pick and choose, and off you go. And even today, you go along to many banks' websites. I work in lending, and half the high street banks' websites I go along to, but I've got no idea what I'm supposed to do. One of the key themes, to answer your question, in terms of something that we see as a key movement in Lendtech and in digital engagement with SMEs, is getting a journey out to the SME that does not require them to have any knowledge of financial products, that seeks to understand what is the nature of their business, what do they actually need the funding and the finance for, and then take in that understanding of all of the questions that you might ask them around the nature of the business, pull in data from various API sources to build that profile of who are they, and then make suggestions of, okay, so we think we know who you are, we think we understand your business. These are the products that we think are a fit for what you want to do, that meet the requirements of your business from a funding perspective. And that's at the point, exactly as Harry was talking about, that there the criticality is presenting those indicative or in fact binding offers as a structure that the customer can just go, yeah, brilliant, that's what I need, hit the button, off we go. So that's one. And second, and I think really related to that, is that in kind of the bad old days of lending tech, many of the larger organizations and technology providers out there adopted what I would sort of describe as a monolithic approach. So people had, big front to back platforms that were all singing and dancing, lots of bells and whistles, all on one platform that tried to do everything. Whereas actually, if you look at organizations and environments that are really successful from a customer experience perspective, they tend to be an ecosystem approach, where the lender and the bank is pulling in the best of a whole heterogeneous environment of different providers, different partners, to build this really nice, easy journey for a customer to execute on.
Yeah, really interesting. And I think sort of tying into that, that's where the technology obviously plays a big part, with lenders being able to sort of use APIs and so on to sort of interact with these marketplaces and so on. I think that's probably a big movement that ties back to that infrastructure piece, of actually really bulking out that infrastructure now to be able to actually play in this embedded market more, and then play in this marketplace sort of a lot more. And I don't know about sort of you, Sean, about sort of how you see the next big movement. I mean, just from a currency cloud perspective, we're seeing, for example, one really interesting trend I'm seeing at the moment is probably more of the traditionally legacy-based sections of lending, for example, trade finance and supply chain finance, that are, they're evolving nicely, but they are further behind something, for example, like unsecured business lending is miles ahead if you compare that to supply chain and trade finance in most aspects. And that's a really interesting point that we're seeing with the FX piece and the sort of infrastructure piece, is that they're now trying to bring a lot more of that in-house, the FX capabilities, the actual capabilities to have named accounts and the reconciliation piece. And again, make it far more digital so they can play in these really what are becoming very digital markets. And again, Sean, it'd be interesting from you, especially from a card provider point of view, if you're seeing sort of similar things in terms of sort of sectors within lending or verticals within lending that, you know, we don't typically see as large drivers of technology adoption, if you're seeing more of those come through the door as well?
Yeah, certainly. So I think the two mega trends that I'm really seeing at the moment are embedded finance and embedded financial services. So just to clarify on those, obviously, from my perspective, embedded finance, where a non-financial player is embedding financial services into their existing proposition, and embedded financial services, where a lender, for example, can add additional financial services components to their proposition. And as you referenced, Sharif, it's really been driven by platform as a service, APIs, and then regulatory initiatives like open banking. So I think now what you're seeing, if you think about as a lender, it's interesting looking at Klarna, which have just started to offer bank accounts in Germany. And they're doing that because they're almost reverse engineering what you've seen the likes of PayPal do, where they started life in payments and then they're closing loop, and now they're offering lending services because they're sat on a gold mine of merchant data. So I'm expecting a lot of lenders to actually start to look at that, to look at the different components and understand, can I offer a bank account? Can I offer lending? Can I offer payments? I really like what Cabbage did over in the US, where they're actually helping people collect payments as well, and then you could automatically use that to pay off the money you borrowed. The second part to it in terms of embedded finance as well, so as I said, I think you need to be available at the point, and I think Ben was touching on it, the customer journey. So, you know, I guess SMEs and even consumers aren't necessarily thinking, right, I need a credit card or I need a loan. They have a specific requirement. If it's a consumer, you might want to lead a certain lifestyle. If it's an SME, you might need to bring on seasonal staff or whatever it might be. You know, that's just the mechanism that allows you to do that, which is funding or lending. So I think by actually, you know, lenders embedding themselves into non-financial services players, I think there's massive growth potential to be unlocked in that space. And then the final point I wanted to touch on, and again, I think Ben mentioned it, it's trying to make it sort of frictionless and automated. So really in the buy now, pay later, that was also about making it completely smooth in terms of the checkout process. But what I'm starting to see now is every individual transaction as a consumer, for example, I can say, right, I went to Paris for the weekend, I spent £200. I came home, I bought a new top on House of Fraser. I should be able to log in the app and say, right, I want the Paris trip on a buy now, pay later module, which is over 3 months. I want to put the other part on my revolving credit facility. So now you're empowering the consumer to have control of how they manage that funding as well. And for me, again, I think it's going to be really interesting to see what new business models and propositions we see brought to the space.
Yeah, I think that's a really interesting point, especially about people like Klarna opening bank accounts, because I definitely agree with that trend as well, where we're seeing, again, from an internal point of view, that movement to having infrastructure to do that, you know, people wanting the ability to open up sort of virtual accounts and so on that can enable collections and payments for their customers, not just for internal purposes. And that's really interesting. Moving on that point, Harry, it'll be really interesting because IWOCA's probably got a really good perspective from both sides of the fence when it comes to embedded finance and sort of financial services, because obviously, you know, IWOCA obviously has a very intuitive API that plugs and plays with a lot of digital banks and other partners. It's got the sort of tie-in with embedded finance, where you're obviously building products with people like Xero to offer credit through financial services. But you've also got IWOCA Pay, which is the other side, working with non-financial services like merchants to give them a payment option. And I mean, is that really a trend that you see is one of the big trends that's going to push IWOCA forward, being able to really interact with all of those embedded markets?
Yeah, absolutely. I think that's the biggest trend that we see sort of driving us forward. And I think Sean touched on a really interesting point there, that customers are looking for solutions to their problems. They're not going through their everyday life and thinking, oh, I need a merchant cash advance, I need invoice finance. They're seeing an issue they need to solve within their business, and to be successful as a lender, you want to be putting your solution in front of them at that time, which you touched on our sort of partnership with Xero, which is a really interesting example of that, where when you putting our finance offering embedded in a platform like that in front of a user that sees that they have a cash flow gap coming up, that's the perfect time for them to use it. And then once they have that funds, they are able to then manage that in the partners platform. We've built our API in a way that means that partners can integrate with us, and their customers don't ever have to leave their service or platform. So for take a banking app as an example, they can access iWalker Capital all within their mobile app and manage the loan, make repayments, top up. And for a partner perspective, that's obviously amazing. They're keeping hold of that relationship with their customer. On the iWalker Pay piece, it's again really interesting, because is what we've kind of seen through the pandemic is that, well, we've known late payments has been a problem for a long time, and it is something that lots of companies are trying to fix. But through the pandemic, that was made even clearer, with businesses not being paid because the people that owed their money weren't being paid, and were worried about their cash flow. And it's a never-ending cycle of problems. So being able to provide the certainty for these users that they'll be paid up front, they don't have to have the credit control worries, is a massive thing, and we see that as a big sort of opportunity over the coming years.
Yeah, really interesting. And I was going to say, one again good leader on from that is really, I'd like to hear from you guys on your thoughts of how the incumbent mindset might change thanks to this past year, which again in my mind has really driven Lendtech to a point of being something that's useful and maybe a nice to have feature, to something that actually we might suddenly start to really drop the ball if we don't incorporate these kind of services. And again, I think you're all going to have slightly different perspectives and have different angles on it. You know, especially Ben with the new funding exchange technologies release will be really interesting. You know, whether incumbents again can use that mass of data that you've collected far more than they would generally collect, or actually maybe collect but won't be able to use and utilize properly. And again, Sean from an outside partner perspective, and Harry from a sort of joint lender perspective. So, you know, sort of maybe starting with Ben, how do you think the sort of incumbent mindset is going to be changed that again will lead to more of this Lendtech evolution?
A few things. I mean, it's hard to kind of pin it down, but you know, we see a few things being important over the next 12 months in particular. So one that's really interesting to me personally is, I mean, you know, we discussed earlier in the session how Lendtech and lending as an industry has been, you know, from a technology perspective, really underinvested in by comparison to, you know, other walks of life and certainly other areas of financial services. And one area of Lendtech in particular, and an area of the SME lending vertical that has just been institutionally underinvested in from a technology perspective, is how technology providers and banks and lenders facilitate doing more business with their brokers and provide tools out to the brokers. Now, some may think that's a slightly unfair statement, because quite a lot of organizations have invested quite a lot in various different types of broker portals and, you know, all various different walks of life. But particularly as we come through a period of economic uncertainty, the role and the value of what commercial finance brokers are doing for the SME market is absolutely critical. And in that statement, I'm not just referring to, you know, you've got two sides of the coin, really. You've got the kind of the digital brokers, the organizations like our own marketplaces and you kind of and digital engagement platforms. But you also have organizations of historically relationship-led structured finance brokers who work with small businesses, particularly those who are equipment heavy, invoice heavy, etc., to really figure out and build a relationship and identify how they can fill their financing needs. And personally, I think as we come out of the pandemic and we see the long-term fallout of the economic situation, there's a big onus that needs to take up, and that is how do we as an industry facilitate those guys doing more business and doing the right kind of business for their customers, and by doing so facilitate more liquidity going to the likes of iWoka, going through our organizations like our own, and and the various other lenders and funders that are out there.
Really interesting. And Sean, how about you? I mean, from probably a slightly similar perspective to our own, about how sort of incumbents really are going to start looking at technology partners more, and actually a lot already have, to drive this technology piece and sort of really speed up a little bit on that. How about you? Where do you think the sort of changes are going to come?
Yeah, definitely. I think when you look at definitely the traditional banking community, they're all going through their own strategy, whether they're build, buy, or partner. But I think there's been some actual interesting examples in that space, especially when Metro Bank, when they acquired RateSetter to help them make that transition into the B2C space. And then they actually ended up partnering with EasyBob so they could start to syndicate CBILS or BBLs loans. So that's been really interesting. I think you're starting to see them actually make traction in that space using one of those go-to-market strategies. I think the other part that you're seeing in traditional banks is they're all looking at some form of greenfield banking. And I think, just to explain, greenfield banking doesn't necessarily have to mean you stand up a bank next to your existing bank, because I think we've seen some spectacular failures in that space as well. And it's not necessarily down to the technology, it's down to the culture and the operational models that obviously banks currently work with, and trying to transform that is inherently difficult. But I think if you look at the whole flavors of greenfield, you're starting to see people using middle layers that they're putting over to legacy technology, so they can start to experiment and use some of these more modern API platforms. But I think the biggest success you'll see is where they take a specific product and they experiment with that product, rather than trying to transform, everything that they offer from their product portfolio. So I think if you look at it from a Lendtech perspective, if you're a bank, maybe you start to experiment with just transforming your credit card. Or maybe, I don't know this for certain, but will banks start looking at buy now, pay later? Banks are sitting on a gold mine of data, but how they use that data to build a buy now, pay later proposition, that's the biggest challenge. But that's what I think you'll see. They'll start to take, just a specific product, test it, and if it works, broaden it out to additional products, and then start to transform that way. Because I think trying to take the leap hasn't worked for any bank currently.
Yeah, I'd agree with that. And I don't know about your view. Obviously, iWoka has had previous partnerships with banks and so on. But I mean, in your view, do you think that's going to change over the next 12 months, thanks to what we've seen and the transition of customers, away from the banks in a lot of cases?
I think we'll see an increase in our relationship with banking partners. To be honest, I think, as we've sort of touched on, consumers are moving to a more digital-led journey, and they are becoming more open and aware of what alternative lenders can offer. And I think that will continue. And I think it's in some ways difficult for a bank to, on their own, to build a completely digital-led journey. So, as Sean said, I think there will be a lot of sort of partnering or acquiring in order to do that. So that's where sort of I see the space heading even more so than it has been now.
Great. Yeah, that's really interesting. I think what I'll do is open up the floor to any people who want to ask questions in the comment section on the stream. We have already had a couple of questions sent, so let me just have a quick look. Actually, one really interesting one that came through was individually, what do we see as the top pain points for growing the Lendtech marketplace? Again, probably back to you, Harry, on to start off on that one, being a lender. Where do you see the most difficult parts of that journey?
It's a very good question. I think I kind of touched on this earlier, but the sort of a lot of the data is held that we need to make credit decisions is held by people we partner with, but there's also considerable amounts that go into our models that aren't sort of easily available, particularly without sort of consent of the customer to share this data. There's this need to provide these sort of pre-approvals or pre-eligibility in order to get that right is quite difficult for a lending perspective. So it's something that we're sort of continuing to invest in, and I'm sure many others in the space are. But it's certainly not an easy thing to do, for sure.
And I'll probably join mine and Sean's up slightly in that. From our perspective, I'd probably look at it slightly more of what people are coming to us for, what pains are they seeing that they're trying to solve by using someone like Currency Cloud, a technology provider. I've touched on it already in that the biggest piece is that infrastructure piece in, how do you build an infrastructure in place and sort of put it in place that acts as a payment engine, that acts as sort of an internal structure to allow for reconciliation, but also scalability in terms of FX, customer usability, giving them access to accounts to actually use those sort of features themselves. And sort of, as I say, I'll link that with you slightly, Sean. Be interesting to hear, from your side again on the card side, because that's becoming more and more important, as you say, at the moment. What do you see customers coming for you? What's their biggest pain point at the moment that they're really coming to you to solve?
So I think the biggest pain point is just the old model of actually working, whereby I think Ben mentioned it's monolithic. You can't self-serve and you can't be agile to new opportunities. I think if you look at product innovation cycles now are only getting quicker. So if you're looking something with a 12-month, 2 years, 3 years lens, by the time you've actually built the thing, the market's moved on. So really, customers come to us because with legacy issuer processor platforms, you have to define your requirements, you send it to the provider, they will then implement those changes for you. Obviously, there's lots of professional services fees associated with that. You're not in control of your own destiny, and obviously it's a longer time to actually develop the product. And I think that's really important, being in control of your own destiny, because even banks are obviously operating on legacy platforms or core banking systems right now. But actually, new players into the market, if you're not careful, you end up building something that will become legacy very quickly too. So I think what you have to bake into your thinking is like you're alluding to, Sharif, that future mindset. So how is the platform going to allow me to scale? How is the platform going to allow me to continually develop and innovate and embrace the ecosystem? I think is mentioned as well as around that marketplace. So I think the best players are looking at platforms that can bring in all the data and bring in solutions from sort of best-in-class solutions from different providers. And the platform, someone like Marqeta, it's like you said, it's the infrastructure that powers that. But we always said the CEO said we're not the sexy part, and we don't want to be the sexy part. So
yeah, that's it. Heroes behind the scenes, as we try to call ourselves as well. I think actually one interesting one, just to break away slightly from that, probably for Ben, because you're probably going to have quite a good insight on this, is a question that's just come in from YouTube. Is there an appetite in the fintech community to build an ecosystem or marketplace to lead the way? And where do lenders start? How do they break free from those challenges? Obviously, Funding Exchange probably very well placed to ask that, as they are probably in that space of, really providing that sort of, especially in the lending space, that ecosystem of bringing lenders together in a lot of different scenarios, actually also tying in with third parties who want a marketplace or a comparison within their own offering. I think that ecosystem really has already got underway and exists, but there's definitely an appetite for it. It would be interesting to hear your perspective on how you see those type of ecosystems evolving.
Yeah, it's a great question. I completely agree. There is huge appetite to provide these functions, not just within the fintech community, but within the wider corporate and banking community as well. Some organizations have, let's say, a slicker route to engagement than others. But in terms of how we as an ecosystem together build out these footprints, I mean, we touched on it together earlier in the conversation. It's services like our marketplace and others like it are only possible to deliver when you have that critical mass of data that you find from various different places in the ecosystem. Very, exactly as Sean was describing, as that best in breed approach to pull in. And yeah, I mean, you've got organizations like ours that are all offering this service. Large corporates are interested in getting into this space. Big technology providers are getting into this space. It's all, the delineation between financial services and other is all just starting to grey over. And it's a very interesting time, and there's a lot of opportunity, but also a lot of competition in what we all do together. At one point, just to come back to your earlier question around some of the challenges that we together face within these ecosystems. A key one, as we see it, is in certain aspects of lending, the concept of indicative decision or straight through deals has been there for some time. And, I work as a perfect example in the unsecured space, where you've got, in the unsecured space, you have a relatively simplistic way of reaching a decision in underwriting a deal. It's largely based off of a credit decision. As you start to go kind of up the complexity curve on different types of product, or increasing the ticket, that becomes a more and more relationship-led, grey area, touchy-feely, kick the tires and figure out if we like the customer and like the deal kind of process. And what we as an industry in this country need to do is look to other areas of the world that have come further along that journey. What I mean, so specifically, you would be very hard pressed in this country to get an auto decision for £100,000 loan. There's a few providers who will do it, very few. In the US, you can get an auto decision on $1 million loan in about 5 minutes. And so it's not going to be too much of a stretch for imagination for those kind of offerings to find their way over here from non-domestic providers. And we, running the domestic ecosystem together, need to get our act together.
Yeah. And another interesting one that came in before was, that's interesting, I think, even from us as a technology provider perspective, I'm saying from Marqeta, but from all angles, is how important do we see partnerships moving forward? I mean, I think we've touched on it quite a bit, that these various sources of data and how we interact with different partners is very, very important. But do we think that's now become more important also because of the speed perspective? People are trying to do things a lot quicker thanks to this digital transition we've seen. So again, from our perspective, I see it very important. We partner with issuers and we partner with acquirers and sort of, and it's critical that we have these type of partnerships, and we have partnerships with banks to give us sort of local rails and payments across the world. It's vital. But again, from your point of view, probably start with Sean, again, do you think that these partnerships are going to become more and more important, and that actually partnerships will probably enable the Lendtech trend to actually grow a lot faster now?
I do, yeah. So I think first you sort of look at what's been the catalyst for change. And I know we've touched on it previously, but open banking for me was the shift in the industry. Now you're moving towards open finance and open data. And I was talking with someone the other day saying the fact that the government sort of forced the banks to open up their data, transaction data through APIs. Well, why wouldn't they do the same to someone like Google or something like that? So you've got that interchange and exchange of data across the spectrum. And then you really create an environment for that partnership-based model where, like we said, you get the best-in-class solutions. But you're absolutely right as well, Sharif. I think through APIs as well, it allows you to quickly access and consume someone's environment, which if you were trying to build it on your own, I think Harry mentioned it, one, it's too timely and it costs a hell of a lot of money. So I think the only really way to sort of build at speed and then be agile to change is to have that partnership model. But I think the partnership model is being reinvented, and it's being reinvented in a good way, because it's no longer about me presenting a PowerPoint presentation to you saying, right, okay, it's going to take 6 months to integrate, and you go, brilliant. It's actually, no, it's readily available, readily accessible. You can integrate, you can test it, and you can start to then build maybe things that you didn't even think were possible. So I think that's the great thing about with infrastructure. You know, once you give it to someone, they can build something that maybe wasn't on the Lego box. It wasn't the picture on the Lego box, but they built something that's actually better for the consumer or better for the customer.
And a slightly different question for Ben and Harry, just to make sure we get through them. What do you start off with, Harry? What do you see as probably, if you were looking at what you were going to invest in next as a lender for a strategic sort of move, what do you see as probably the smartest strategic investment at the moment? Is it in technology? Is it in partnerships? Is it in sort of using third parties? I mean, where do you see sort of your most important strategic move at the moment?
Yeah, so we've always sort of heavily invested in the technology aspect of our business, and in the past year even more so than ever. So that's not really a big change for us. That's sort of always been at the core of our business. But I think the partnership side and some of what Sean has just touched on there is really important, and it is where we see a lot of growth coming from over the coming years. And you're seeing it across the market. Businesses are opening up, they're making their API documentation publicly available. They're providing access to their sandbox for people to just go in and start building things. There's not this sort of long tail conversations that drag over months and months and months for businesses to start working together. The commercial terms are already almost come later now. It's people just dive in and build something great that's going to benefit the customer, and worry about the commercials and everything like that later. And I think that's really positive for the industry, and is what's going to sort of help us grow, because I think sort of the collaboration there is going to be key.
Yeah, and probably saying to you, Ben, from also probably what you're seeing in trends as what's most important now for lenders to be seen, but also from your own perspective, you know, where do you see as the important strategic moves?
Two main areas from my perspective. One is pretty much as Harry was touching on. It's that ability to stand up, you know, new and improved digital engagement with your customers really quickly, to be able to iterate it really easily. And you know, as we discussed earlier in the session, it's those digital engagement journeys with the customer being customer centric, where, you know, it's just easy for the customer to engage and easy for them to get a deal. That's one area. The other would be, particularly coming out of the pandemic, if I was a P&L owner in a bank, I would be wanting my technology team to be having long, hard thinks about how I get a better understanding of my in-life portfolio. There is for obvious reasons, a rising concern around the level of loans and exposure that's been written over the last 12 months without an acute understanding of the exposure in those businesses.
Really interesting. I think we're pretty much coming to the end of our time there, but I think it was definitely really interesting to hear about the importance now of sort of evolving, and especially with embedded finance and embedded lending becoming ever more relevant, especially within business lending, probably already slightly within consumer lending, but that's going to grow as well. But thanks everyone for your time. Really informative. I hope everyone watching found it informative as well. But that's it from us. Thanks again.
Thanks everyone.
Cheers.
Cheers everybody.
Thanks.
Cheers.
Bye now.
Bye.
Bye.